Hi everyone, Gary Serra here with Gary Serra Associates with your October 2018 market update. We wanted to first acknowledge and thank every person in history, man and woman, that has served and sacrificed for keeping our country safe and have our freedoms, and acknowledging Remembrance Day coming up on November 11th. If you haven't gotten your poppy, go out and get one. The proceeds go to a great cause, so please support and acknowledge those who have helped us in the past. Getting back to our market update, if you look to see what's been happening with the numbers, obviously our market has been continuing to shift. For home sales in October, we're noticing that there were 1,966 home sales in October 2018, which actually is a 23.3% increase from September. So we've actually seen more activity in sales from last month to this month. Now, looking compared to last year, we are down, almost down 35% from October 2017. Not really a surprise because the market was frenetically crazy busy last year, so that wasn't really necessarily a normal market per se. If we look at current listings for October, there were 12,984 homes listed, and this represents a 0.8% decrease from September. So again, listing inventory has dropped a slight amount and sales were up from last month. So good news in that respect. Again, looking back to October 2017, we were at 42.1% increase in current listings. Again, not surprising because the supply almost was non-existent last year. And then looking at the market definitions of what sales to active ratio is, and whether we are in a seller's market or a buyer's market or a balanced market, and what does that mean? And we talk about this every month, but just to make it clear for everybody who's watching, a seller's market is anything that's above 20%, and a buyer's market is anything that's below 12%, and anything in between is what's considered a balanced market. So if we look at the numbers and do a comparison, for October of 2018, for condos we were at 20.6%, so just into seller's market. And if we compare that to September, 17.6%. So actually the numbers actually have bettered in October over September. September we were at 17.6, which was on the high end of balanced market. If we look at October for townhomes, 17.3%, so again, high balanced market category, and then September, 14%, so more of the mid-balanced market. If we look at for October in detached, 10.3%, so definitely a buyer's market, and in September, 7.8%, so even lower sort of category of the buyer's market. In October, combined ratio of all these categories was 15.1%, and in September it was 12.2%. So to me, how do we interpret these numbers? This is good news in the sense where I think September was showing that people had really paused in the market and were kind of like not doing anything. And I think October we've seen people kind of adjust to the new normal of the market a little bit more and are starting to go out there and actually buy and sell a little bit more than what we've seen. Whether, how that'll continue, we don't know, but certainly that's the trend that we're seeing month over month, which again, not surprising in past experiences when we see markets shift. The first thing people do is usually they pause and they don't do anything, and then they kind of adjust to the new normal, and then you kind of start to see the market to move along again. Benchmark price for Metro Vancouver, the current benchmark price is sitting at $1,062,100, and that represents a 1% increase from last year. Again, in over the year we've seen the market do a lot of things, so good that it's still showing a very slight increase over last year. However, in the last 3 months we've seen a 3.3% decrease. So again, market correction is happening. How that's going to go forward, we're not really quite sure yet, but that's what we're seeing so far in benchmark prices. Looking at the Real Estate Board of Greater Vancouver's market highlights for October, a few things I want to sort of show is benchmark price for each category. So for detached homes, the benchmark price is sitting at $1.524 million. And also average days on the market for detached houses are at 53 days. If we look at the townhouse market, the benchmark price is sitting at $829,200, and that's average days on market is currently 32 days on the market. Apartments or condos, benchmark price is sitting at $683,500, and average days on the market is 29 days, which is pretty reflective for our team here at Garrison Associates. We're sitting at around 22 days on the market, average days on market. Last year we were sitting at 8 days on the market, so definitely things are taking longer to sell, and we're not in that same situation that we were before. What does this mean for you guys? Well, we've said it before, I'm going to say it again, it's a really great time to move up in the market. We actually have helped several clients recently move up in the market or in the process of doing so, because they realize that selling and buying into a more expensive property when a market is shifting actually makes them money. So if you're selling a place that's worth $1 million and buying a place that's $2 million, the 10%, let's say the market dropped 10%, you're actually making $100,000 from the discounting that's happening. So that's a really great opportunity for anybody who's looking to move up in the market because they need more space or their family's growing or what have you. If you're thinking of selling, timing and proper pricing is everything. I've gone on 5 listing appointments this week, and timing is so important in this market. I met with a client yesterday that's looking to relocate back east, and he's thinking of selling, but not sure about when his job is going to be secured. So we've talked about strategizing about that, and he's considering actually selling sooner, even though the job's not secured yet, because he doesn't want to leave money on the table if he has to sit for another month or two to wait, and if the market continues to drop, it's money that is out of his pocket. We've had other clients that we were helping, and another client, for example, she's bought a pre-sale, she's closing in February, and we're listing now because she wants to take advantage, cash out, and then be ready with her money for the new property in the new year, but wants to take advantage of at least the pricing that we have right now. And that's the risk you want to sort of look at, is if you're looking to sell and then maybe repurchase, but it's not necessarily happening right in the same time frame, taking advantage of the fact of what the market is now and not running the risk of the market continuing to drop could certainly work in your benefit. So that's one of the things we do here at Gary Stern Associates. We really sit down with the client and try to counsel and guide and strategize on what's the best option for you based on your situation. If you're thinking of buying, just as a buyer, all the buyers out there, it's an awesome time to buy because there's less competition in the market. You can do your due diligence of having proper, things like financing clauses and home inspection, reading strata documents if you're buying into a strata, all of those things. And we've secured some awesome deals for clients. The most recent transaction we did with a client, we saved them over $100,000 on their over the list price. That doesn't always happen, but certainly there's some better opportunities out there for buyers. And in a shifting market, strategy is everything when it comes to selling. Like I talked about before, it's all about making sure that what we do and the direction we take with you is going to make sense for your situation, so that you can get the best results in what's happening in our current market. I hope that helps. If there's any questions, of course, reach out. You can call, email, or text, or direct message me online, and we'd be happy to help. And I hope you have a great Remembrance Day weekend, and we will see you next month. Bye for now.